Hello and welcome to this special show on the occasion of the 74th Independence Day. As India enters the 74th year of independence and as we strive to become a truly Aatmanirbhar Bharat, the onus now is on India Inc. to play a much larger role in making India self-reliant and to contribute to the purpose of nation building. So is India Inc. ready to take up the mantle? What are the challenges? What are the opportunities? What could be the path ahead? Is it going to be a bumpy road ahead or it's going to be a smooth ride ahead? So to discuss all that and much more, we have best of the best of India Inc. Joining us on the show today, we have Mr. Uday Kotak, President in CII and Chairman and Managing Director of Kotak Bank, Mr. T.V. Narendran, President Designate CII and CEO and Managing Director of Tata Steel, Mr. Sanjiv Bajaj, Vice President CII and CMD of Bajaj Finserv Limited, and Mr. Chandrajit Banerjee, Director General with CII.
So far, we have seen the Prime Minister address the nation, as is the custom, from Red Fort. He has announced an economic vaccine of sorts. So in a speech that lasted nearly 2 hours, the Prime Minister talked about the first phase of the economic stimulus package, but also indicated what's going to come going forward. The biggest one of them, perhaps, is the focus that is going to come for the infrastructure story. Remember, infrastructure has a domino effect, a multiplier effect. And the Prime Minister couldn't have been more vocal on this when he did announce that there was going to be a pipeline created for projects worth nearly 100 lakh crore rupees. 7,000 projects have been identified. Speaking of economic vaccines, there was a big message for the health sector at large. The National Digital Health Mission. We've been hearing about this, but it's official, the Prime Minister announcing that. And this is going to have a big role to play, not just for the health workers, but the way it's going to be integrated by the financial services as well as the insurance sector at large. Talking of financial services, he did spend some time talking about the financial services and how in 1 month alone, we saw digital transactions worth 3 lakh crore rupees, indicating that this is a government that's going to focus a lot more on the digital ecosystem. And I know that the President and the CII would have been very happy to hear that. Plus, what Mr. Kotak has been talking about, why can't people in villages work for the likes of Google? You're going to see optical fibers in the next 1,000 days being laid in almost every village in the country. That is what the Prime Minister has announced from the Red Fort. So this is just laying the foundation of the economic vaccine. One very other important point to mention, he talked about the agriculture fund of 1 lakh crore rupees announced a few days ago. But clearly the Prime Minister is now focusing a little above the bottom of the pyramid. So far we've been talking about the bottom of the pyramid, but the big announcement also coming in from the Red Fort, Nikunj, has been the focus coming in for the middle class. So the next set of reforms will also address the middle class.
Mr. Kotak, let me kickstart our today's panel discussion with you. Good morning once again. Mr. Kotak, lot of emphasis on economy, and truly the Prime Minister has crafted a great strategy and a brilliant vision on Independence Day, that how India can become truly independent or self-reliant.
Thank you, and delighted to be on ET now. As I see it, Prime Minister's speech today was a speech of inspiring confidence amongst Indians, at the same time aspiration and hope. It is very crucial at this time when COVID is continuing to be a challenge for the entire world, that we have a leader who's focused on giving us the confidence not only to fight COVID, but to focus on building India into truly an Aatmanirbhar Bharat. I'm actually extremely enthused, and we underestimate the challenges of keeping India as one united country, which is very effectively being done, as we have seen for the last 74 years. And Prime Minister's focus today ensures that we Indians think about India as a one single India. In terms of focus areas, I was happy to note his particular focus on infrastructure and an approach to infrastructure which is integrated. He mentioned, let us not look at infrastructure in bits and pieces and verticals. It's a holistic, multimodal, interdependent approach to infrastructure. And a supply side response at this point of time with 110 lakh crores to be spent over the next few years will have significant opportunities for job creation and demand stimulus effectively as well.
Mr. Bajaj, do you think the Prime Minister today has really set the tone for not big but path-breaking reforms going forward? Today's independence speech was indeed a speech with a difference, with a purpose, and it was a speech which perhaps could really unleash animal spirits back with India Inc.
Morning, Nikunj. And if you see over the past year, the Prime Minister and the government have really talked about Aatmanirbhar India, and especially after COVID-19. What we've heard today is Aatmanirbhar all around. It's Aatmanirbhar, whether it is what's going to be done at the border, where it's not only our brothers, but also our sisters that are going to protect us. It's Aatmanirbhar where it comes to farmers. Just one simple change done in the last year, where the farmers produced can now be sold all over the country rather than being restricted where they could buy and sell. And now linking it digitally can completely change farming in India. And you referred about the agricultural fund. Infrastructure, another big area which is a job multiplier, as was talked about. Look at the whole Aatmanirbhar, the way we've been talking about on the business side. So we are talking about make in India, make for the world. As he said, how long are we going to be importing finished goods instead of making those finished goods and exporting those all over the world? Look at the whole digital health mission. This is, I know, something that the government has been working on for some time, and I'm glad that the Prime Minister's announced it today. A national digital health ID for all, putting all our health records together, can have a profound change impact in the coming years on how health services are made available to the average Indian, quality, reach, cost across. And there are so many other things that he has talked about. So we have a very, I would say, well-rounded plan, and it has concrete ideas. It's not just up in the air. It has very concrete ideas. As we know, the God is always in the execution. But these are clearly achievable areas, and it is for us together with the government to go ahead and achieve these areas.
Okay, I'll now go across to Mr. TV Narendran. Good morning, Mr. Narendran. This is Nayantara Rai. Massive opportunities that are coming in for India Inc. The question I want to ask you is that is India Inc. also ready to partner the government? For example, for Aatmanirbhar, a lot of your industry peers, particularly in the steel sector, for example, have been talking about how they will stop imports from China. They're going to substitute those Chinese imports. But Mr. Narendran, a massive play that is also coming in for the construction sector today. Are we going to see India Inc. truly partner the government for this larger vision?
Yeah, thank you, Nayantara. I think it's obviously a great vision and a lot of plans to back the vision. And it's very important for multiple reasons. I think the Prime Minister has been talking of being Aatmanirbhar, but he's also kept the focus on driving competitiveness of industry. It's not just about saying that we will be self-reliant and protect industry. It's also about saying that how do we make industry more efficient? How do we create opportunities for industry to build scale? And how do we address the costs which hamper industry in India, which is basically a lot of costs outside the factory gates? And that's where infrastructure comes in. So I think the spending on infrastructure, both digital and physical infrastructure, I think that was very specifically mentioned, helps not only in spurring demand, because that activity creates economic activity, that spend creates economic activity, but it also addresses competitiveness and addresses costs and efficiencies. And as the Prime Minister said, helps us compete with the rest of the world and supply to the rest of the world. Obviously, industry is ready to partner with the government. I think a lot of the investments over the years, even in infrastructure, has come from government and from private sector. I think you mentioned the steel industry. The steel industry has been one of the biggest investors over the last 10 years in self-reliant India. And you talked about China, and India is today a net exporter of steel, and rightly so, because India has the raw materials. The Prime Minister talked about that as well. Today, if you look at the countries, if you look at the last quarter's results, while it's not been great for the industry, But if you look at the top 10, most profitable steel companies in the world, most of them are Russians or Indians, and that's because Russia and India have the raw materials. And I think so. These are things that we need to leverage. Industry needs to build scale. Industry needs to build competitiveness, and the government needs to support by building infrastructure. So I think we're moving in the right direction, and obviously industry is happy to work with the government to find the solutions for a brighter future.
I'll go across now to the Director General of the CII, Mr. Chandrajit Banerjee, with senior bureaucrats, the ministers. You're even often called to the Prime Minister's office with the rest of the industry. The question I want to also ask you, Mr. Banerjee, is that as India builds not just for itself, for the world, initially what you're seeing is an impetus on growing inwards, on growing protectionist, license Raj in a sense coming back. Is this the way to go for India to really become Aatmanirbhar?
So I see that, Aatmanirbharta or Aatmanirbhar Bharat is not in contradiction with engaging with the world and really looking at, say, for instance, the Make in India to make for the world. And this should encourage phenomenally for us to have our foreign trade policy in place at the very earliest. We also must start looking at having smartly done trade deals, if possible FTAs, with countries with whom we have complementarities. So countries which are markets for India, not the other way around, the likes of, say, for instance, US, EU, and so on and so forth. So there is there also needs to be certainty about incentives for exports, so to say. For examples, MEIS and therefore RODTEP. Currently, there is a lot of uncertainty about both. But I see the Prime Minister's speech today and his focus on Aatmanirbhar Bharat is absolutely in sync with not only making Indian industry competitive, but also to see to it that there is a very strong connection with the rest of the world. And I think we see Aatmanirbhar Bharat and Aatmanirbharta to be a very clear understanding as to how we can engage with the world by being competitive in terms of industry, by having competitive policies, which can make us compete with the rest of the world. And I think for that, we need some amount of work today between different sections of the study. And you said that industry-government interaction, which has been a very, very important area of work, which will give us those policy and that ecosystem, which will make us self-reliant, as well as which will make us extremely well connected to the rest of the world.
Mr. Kotak, while the intent and the vision of the Prime Minister clearly is focusing on making India more self-reliant, but before we move forward, I just want to take the clock back. Why do you think India in last 20 years has failed to become a superpower in manufacturing, with the exception of, let's say, pharma or autos or two-wheelers? India frankly has not had too much of success with manufacturing. So how will this decade be different, where we can truly emerge as a manufacturing powerhouse? Because the challenges which were there 20 years ago, Mr. Kotak, those challenges are still there on the side of labor, cost of capital, and even land.
Nikunj, I would divide it into two parts. The first, of course, is how India does better in terms of our policies and processes, which is one part of it. The second part of it is the biggest elephant in the last 10 to 20 years has by far been China. And China has basically captured very large parts of the Indian domestic market. Now with net imports India doing from China, which is nearly $60 billion net. So if that is the scale at which China has made inroads into the Indian market, they have become the factory of the world for sure, but has also captured a lot of India. If this is the reality, we then next need to ask the second question. Are all the exports from China fairly priced, or there is something about the costing which China does, which normal economics finds it difficult to understand? And if that is so, and if there is any situation where Indian manufacturing has got unfair competition because of manipulative pricing of any form, then it is unfair to blame Indian business and industry. And I've talked to many members of CII and members of Indian industry, and they have said that in the last 10 to 15 years, sector after sector, segment after segment, China has been able to so dramatically underprice its goods that many Indian manufacturers have gone out of business. And once they've captured that market, in some cases, they've also increased pricing thereafter, after domestic manufacturing has gone away. The same thing China has done to the US, which is what the battle is between US and China. Therefore, when we are looking at the Indian situation and India getting stronger, we need to ensure that unfair competition has no place. At the same time, I think there is a very important need to focus on execution, on getting our policies right and making sure it translates to benefits at the ground. If I have to take Aatmanirbharta and two aspects of Aatmanirbharta to make it work, besides local for vocal, which is important, or vocal for local, which is important, I think there are two E's for making India truly Aatmanirbhar. Post this effort, how are we growing our net exports? That is a test of our competitiveness. And second is a surgical focus on execution. So vision, policy to execution. We must cut down the time on execution post a policy is being made.
Right. Mr. Bajaj, my next follow-up question is that India has some natural edge and there are some pockets where our skill sets are much better. For example, India is great in IT services, it is not great in IT products. India is great in chemistry, it is not great in biology when it comes to pharmaceuticals. Do you think that is the differentiating part which we need to focus on rather than having a complete 360-degree view of making India self-reliant? Should one now focus on moving up the value chain, try to focus on aspects where the productivity and the digitalization would be higher rather than focusing on pockets like footwear, sportswear, and even low-ticket or entry-level items?
Nikunj, the way I look at it, you can actually break up what needs to be done beyond what Uday has said in really three areas. One, it's really the last 20 years where the benefits of a very large domestic consumption economy have become evident. And they've become evident in certain sectors, more apparent than others, probably driven by need. Like you talked about autos, two-wheelers. We are the largest manufacturers in the world. Not only the largest, we make the right quality and price that sells all over the world. Why has this happened? It's because we had a very large consumption base over here, and the price point and the need of the product suited our requirements, our money power in the hands of the middle class Indian in the last 15 years. So you will see those sectors which have built significant strength and capability in the last 15, 20 years as the first that then ventured overseas. Of course, you've seen some sectors like IT services that naturally ventured overseas first, because that's where the demand was. But again, leveraging capability, leveraging the fact that we had low cost but high quality engineers who could do coding work at least fairly simply. So this is the first part, I would say, that leveraging what got built in India in the last 15 years. Our opportunity now is to do it in a far more planned way. So you talked about on the pharma side, you're doing one, you're not doing the other, etc. As a country and with our government, we need to get together to say, where is the supply-demand mismatch? Where are the, I would say, political opportunities for us in what we produce and service for the world, and identify those 20, 25, 30 sectors. But then comes the third part of it, and that is the role of the government. You know, there was always this whole argument over the last 30 years that let us internally liberalize before we externally liberalize. Now, those times have gone. We've internally liberalized a lot over the years, but we externally liberalized earlier. Now, the role of the government is that if we have to build an Aatmanirbhar economy and a set of businesses, then what is the roadmap for that over the next 5, 7, 8, 10 years? Because this is not short term. This will require significant alignment of government policies, of the government opening up further on ease of doing business, of private sector putting in significant amounts of money, either importing innovation or building innovation. and creating a roadmap of capability, of capacity for all that produce. Uday talked about how so many Chinese companies, and it still foxes us, can underprice so easily. So if that happens in 3 years' time, will we give up on Aatmanirbhar India? I hope not. The confidence is required to the private sector that from the government that we are with you on this for the next 10 years and onwards. And these sectors that we identify for the future, we fully back you, but you build up competitiveness. Don't take it as protection. Build up innovation, build up efficiency, build up scale. And then we will see this happening, Nikunj.
It's a fantastic point being made that, be competitive, don't necessarily be protectionist. Mr. Uday Kotak, if I can come to you. Good morning, Nayantara Rai here. So, we set the stage for India becoming Aatmanirbhar. You started seeing initial action from the government as well, setting up a committee which is going to be headed by Dr. Pawan Goenka. That's a government committee on Aatmanirbhar. But Mr. Uday Kotak, going forward, the two biggest challenges that India has, besides, of course, the bank, and we'll talk about banks in a bit, is the high energy cost as well as the poor supply chain. It gets further compounded once again by the banking trouble and the fact that it's difficult still to do business here. The multiplicity of powers, the number of approvals that are required, for example. If I could just ask you, the top 3-4 things that you asked for from the Modi government to make it easy to do business here, not just for domestic industry, but also all the foreign investors that India has been wooing, especially in the last 1 month?
Very good question, Nayantara. My first answer to that is linked to a reality in the post or current COVID era. In the beginning, the entire lockdowns and opening was being fully controlled by the central government. We have now seen a decentralization being made available to the states. And I do believe we have a challenge because we see frequent lockdowns, openings, shutdowns again. And when some of us talk to the various state governments across the country, the states are saying our focus is the virus and the health as our key area. GDP, they leave it much more to Delhi. Prime Minister in his speech rightly said that the center and states will work hand in hand, khambe se khamba. The time has come for the states to work with the center and consider that not only is the control of the virus important, which is having an impact on lives, but economy, GDP, India's growth, India's development for livelihoods is also a responsibility not only of the center, but also of the states. Therefore, one of the most important things which I think is required today is close coordination between the center and states towards a seamless operation of the Indian economy, keeping in mind the COVID challenges. I think that is point number one. Point number two is wherever there is a possibility for the government, as Chandrajit said rightly, and I think Narendran also highlighted on that, is we must do whatever it takes to build exports. Because exports are a true proof of our ability to be competitive. And things like delays in payments from the government or committed incentives is something which I would strongly urge the government to move on that fairly, so that there is a consistent message that India is competitive on exports. So the second important answer of focus is exports, exports, exports. If we export, we will also create demand for Indian manufacturing. And the third point is, which we have to be clear about, is COVID has given us a shock both on the demand side and the supply side. We are now seeing a stabilization to a certain extent compared to April and May. And we may debate where the current status is, but my sense is in many sectors, demand is back to 70 to 80% of normal. That is a pretty decent number. What I worry about more is potential supply shocks, that when there is demand, we don't have enough supply. And that is where we have to be careful that we don't create supply side shocks as inflationary risks at a time when the RBI has been very accommodative in terms of its monetary policy. This is a very important point, Nayantara. Let us not create supply side shocks, which will find our financial sector strategy come into pressure.
Chandrajit Banerjee, if I can come to you now, we can't afford more supply shocks. All data is pointing towards the fact that July may not be a good month simply because we did see supply shocks. Suddenly there were disruptions in supply chains, a supply chain which is anyway quite poor. All of you are making a case at how we need to make our exports competitive. You started seeing the initial messaging from the government, a big booster coming, of course, from electronics, the likes of Apple, Samsung, wanting to manufacture more from India. But there are many other sectors which we haven't started talking about as yet, which can have a massive multiplier effect, particularly employment. Manufacturing when it comes to, for example, let's say textiles. What is it that the CII is asking the government for to make industry more competitive and to make sure that during COVID-19, industry is also willing to invest more?
So there are two parts of this. One is, of course, when we talk about how do we make ourselves more competitive. You spoke and Uday responded on what are those critical factors that needs to go in terms of those immediate changes. And I see that there is a huge need for India to work. Today, it's the maximum need of cooperative federalism and competitive federalism is actually today, because we see a lot needs to be done in terms of how we can action the states in terms of making ourselves competitive, in terms of how investments could be much more easier, both for domestic as well as foreign investors. Now, so that's something which needs to be focused upon, and we are seeing different areas of work that needs to be done. Say, for instance, land. I'm not going into the details, but the type of reforms that can be done to make that available. And of course, the government has to focus on and continue to focus on seeing how that collaborative framework can result in actually investments becoming easier to make on the ground. And that's something that you referred to the committee, which is working. And I must say that it's just not a couple of sectors or a very broad. There are 12 plus 8 sectors, and when I say 12 plus 8, we are also looking at subsectors into that committee. So and these are both employment generating sectors. So it is just not the entire just the textile, but we are looking at subsectors within the textile, say for instance, and seeing which could be those employment generating sectors, which could also have a lot of value addition in terms of exports. So we are looking at both of this to see how India can actually develop strength in some of these sectors, which would help India grow. So it's a very important focus that we are putting on in bringing in more and more subsectors. So if you see the entire auto industry, we are looking at the way the auto component industry have been able to sort of become linked to the supply chain. We are really looking at how we could be a part of the global supply chain in terms of some of the sectors. And that's where I see a lot of opportunities for us to become much more in terms of employment intensive, because that is where India's strength would be. So that's the overall focus as we are working with the government in terms of planning out the policies for the next few years.
Mr. Narendran, let me bring out the great example of Tata Steel for the benefit of our viewers and for those who are watching the show right now, those who will be watching the show online and a little later. Tata Steel is a commodity company and you're a net exporter. And to be successful in the export business, if you're in a commodity business, you need to be highly efficient and you need to be brutally competitive. So if Tata Steel can be a net exporter in a country where energy cost is high, inefficiencies are high, challenges to run a commodity supply chain are immense. So if you can do it, why can't others do it?
I think it's it's a 100-year-old story, right? So to me, it's a journey you're constantly committed to. It's something that you keep investing in, and the steel industry goes through the cycles. In one way, it's good because every time there's a down cycle, if you're not the last man standing, you don't survive, right? So it forces you to be competitive. But if I look at, forget Tata Steel, if I look at the resource sector, and the Prime Minister talked about that, India is blessed to be geologically rich. There are very few countries which are as geologically rich as India. So that is one. So we have inherited a lot of wealth which is under the ground, right? So the question is, how do you leverage that and how do you value add to that? And the great opportunity is a lot of the geological richness of India is in some of the poorest parts of the country. And what manufacturing does, and which is why I think it's very important for the future of India, is that it creates jobs away from the urban centers. One is you have job creation in the big cities, which is happening. The tech sector creates a lot of jobs in the urban centers. But manufacturing creates urban centers away from the traditional urban centers. So that's where manufacturing is very important. And if you really look at the resource sector, it's really in some of the poorest parts of the country. The Prime Minister talked in a speech about Eastern India. Chhattisgarh, Jharkhand, Odisha, these are some of the geologically richest states in the country. And obviously a lot needs to be done. So a lot is happening there. So one is, let's leverage the richness that we have below the ground. Two is, industry must be tasked with becoming competitive. And I think Tata Steel has done that, continuously. So it's about benchmarking your productivity levels to the best in the world. It doesn't matter if your labor costs are cheap. You need to make sure that you're as productive as a steel company in the most expensive labor market. That's how you drive productivity. Adopt technology, use digital. That's a great opportunity for us today. Build efficiency into the plants that you construct, because India has a great opportunity because we are building new facilities. So how can we design for efficiency? How can we not make the mistakes that some of the others have made when they built manufacturing facilities earlier? So I think there are a lot of advantages we have, and the greatest advantage we have is we have the potential to build scale. If you look at the steel industry, India is the second largest producer and consumer of steel in the world. We are still much smaller than China, but the market allows you the ability to build scale. So you can build efficiencies through scale, you can build efficiencies through technology, a relentless focus on productivity and innovation and things like that. But there are a lot of costs outside of the factory gates. So industry should be tasked with becoming world-class and competitive within the factory gates. And Tata Steel today, and I would say some of our peers in the industry, are all amongst the lowest cost producers of steel in the world. Like I said, the only other steel producers in the world who can produce steel cheaper than Indian producers are the Russians, because they are similarly blessed with geological richness, but they don't have the scale to build large capacities in the domestic market. China has the scale but doesn't have the raw materials that India has. So I think there are great opportunities for us to build scale. We need to pick the sectors where we think we can be globally competitive, where we can build scale, have a plan, a long-year plan, a long-term plan. The states and the center need to work together on this. This point was made by my other colleagues, because a lot of the day-to-day activity for the industry is with the state. The center may define the policy, but your life on a daily basis depends on your relationship, not only with the state, but also with the district. So an alignment, and I don't think we need to chase all sectors, across. We just need to pick the sectors, and we need to decide the part of the value chain that we think we can be competitive in, and then build scale and competitiveness there. And I think we can certainly be a big player in the global markets. Today, India is only 1.5% of manufacturing trade. And I think CII has released a paper recently saying that we need to get to 5% in manufacturing. And I think a lot of work that is going on can help us get there.
Mr. Bajaj, I'll take a leaf of our last interaction. And you divided the economy into three parts beautifully when we spoke last time: survive, revive, and growth. So where are we now? Now that COVID crisis for the moment looks that the worst is behind us. So we've survived. Are we currently far away from growth, or you think growth also has started?
Nikunj, I must say you have good memory, or you're refreshing up from past recordings. We are very clearly in the area of revive. We've started seeing some growth from June, but let us also be cautious about that growth and realize that it could be pent-up demand. So I would not try to run ahead of ourselves at this point of time. But we clearly are in the revival stage. As Uday mentioned earlier, we have to ensure that as far as regrowing our economy is concerned, states have to take on the responsibility to coordinate with the center and ensure that business stays open.
Mr. Kotak, there is this one comment of yours which has stayed with both Nayantara and me, and I must share with you that we delightfully quote that line of yours almost on a daily basis on various shows of ET Now and various shows. And your quote, Mr. Kotak, was that if you are in the middle of a sea, you've been hit by a turbulence. It is important to keep the ship steady so that you can reach the shore very safely. Do you think the turbulence is over and most of the companies, and at least the big companies, have reached the shore?
Nikunj, I would say that we are still in the middle of high seas. The nature of turbulence has changed. Okay, so we are now getting more and more accepting of the fact that COVID is not going away in a hurry. But humanity learns to adjust to the reality. The reality is we will have COVID cases, which will show as positive cases. We will see recovery cases, which in India's case, the recovery rate is high. And then we will have mortality. Therefore, we need to continue to have our strategy to deal with COVID, which the turbulence of COVID in the ocean is not gone. What has happened is, as we are in the middle of our high seas in the ship, we have learned to navigate better than what we thought we were in April 2020. Now, the challenge is, how do we navigate and get to a little greater speed of navigation? That is issue number one. The issue number two is, where is the shore? The shore, in my view, is a vaccine or a cure. I would like to reiterate that this is a health and a science challenge in front of us, manifesting itself into economic challenge. Therefore, the solution of getting to the shore is not a finance and economic solution. It is in the realm of science. And at this stage, most people seem to be saying that at some time in 2021 calendar, we have a possibility of getting to the shore. Therefore, 2020 is likely to be hindsight. And at this stage, it doesn't look like the shore is likely to be reached in 2020 based on all the developments of the vaccine and the cure. We will get greater visibility by end of this year, but the real solution and sustainable solution, I would like to hope and believe, is 2021. And therefore, as people in economics, finance, we need to be able to navigate this ship for at least the next 6 to 12 months, while the science is moving forward on the other hand.
So, Mr. Kotak, with the change in the nature of the turbulence, a lot of noise being made around vaccines. It's still very early noise. The Prime Minister today, in fact, at Red Fort said that India is testing not one, but as many as 3 vaccines. This is also a time where, as humanity changes, what we're seeing today as a normal is likely to continue to remain the normal in the post-COVID world. The financial sector has been seen as one that has done reasonably well at the moment, at least during COVID-19. A lot of the banks and NBFCs, for example, have been COVID-proofing themselves with the large fundraise. But can the SMEs and the MSMEs survive that long? Especially, you were talking about almost till the end of next year. Is it possible? They're inefficient as it is. They're not the favorite of the banks and NBFCs to be lent to either. So can they survive?
First of all, I said sometime in 2021. I did not say end of next year. Therefore, my hope is early 2021, but we should be ready for sometime in 2021, I hope. Now, if you look at the economy, there are 3 shock absorbers. Shock absorber number 1 is the individual or the business directly. So when there is a loss hitting, the first hit is to the business and or the individual. The second is the government or the state. how much does the state take the pain of that loss? And the residual after these two sits on the financial sector. Therefore, we can debate on the size of the total pain, but there are three partners in sharing this loss. The individual and the business, particularly the MSME and the small scale, are more vulnerable. Therefore, it is important that their shock absorption is kept to the minimal. And that has to be primarily focused on by the government. And in that context, the MSME scheme of the government is being excellent. The government has shown flexibility and has even tweaked it, redefined MSME definition, so allowed slightly larger SMEs also to participate in that, and at the same time has recently allowed individual sole proprietors and others to also get benefit of the government guarantee scheme. The government has taken the steps of 3 lakh crores guarantee to absorb the part of the shock. I believe if more needs to be done, the government should be open to doing it for the weaker sectors, and the financial sector, on the other hand, has taken steps to beef themselves. Private sector banks in the last 2 months combined have, and of course some housing finance companies on a combined basis have raised $10 billion of new capital. I'm sure the government is thinking about its strategy for public sector banks, and good NBFCs are already well capitalized. The financial sector's loss-bearing capacity compared to April today has also improved to take the shocks which may come from the real economy.
That's right. You've seen the financial sector COVID-proofing itself, $10 billion in fundraise. NBFCs seem to be on a slightly better wicket as well. Of course, Mr. Sanjiv Bajaj's NBFC has always been very well capitalized. Mr. Sanjiv Bajaj, we had a line connection problem with you. Now that you're back with us, I'd like to take forward this entire theme of financial services. A lot of onus on financial services. They're also being blamed for being very conservative, for being afraid of rising NPAs, for just not lending enough, which is their core business. It's something the government keeps talking about. It's the government that had to come out with a guarantee scheme just to make sure that the SMEs actually survive and banks, NBFCs lend to these SMEs. You've seen a lot of debate around the loan moratorium as well. So given all of this, how is the big supposed to get bigger?
Well, Nayantara, it depends on what you mean by big. If it's a big problem, we clearly don't want it getting bigger. As Uday has just explained, a combination of factors from what the government has already done and what, in this case, financial services industry, banks, NBFCs have done to beef up their own capabilities. Look at the speed, the 3 lakh crore line for MSMEs that the government announced. It's been just a few months, and I believe already 1,30,000 is committed, almost 90,000 is disbursed. This is the speed with which banking and NBFCs have moved ahead. But yes, end of the day, we are essentially an organization or a set of businesses that lend 100 rupees. If we get back 102, we make 2 rupees. If we don't get that from one borrower, we lose the entire 100 rupees. So credit is always going to be fundamentally important to a lender. The equally important issue is at times like this, do you just freeze over and shut shop? No, I don't think that's what banks and NBFCs are doing. They are reevaluating customers, they're reevaluating risk. They're trying to see that for their existing customers, how can they support them further by giving them additional loans? They're looking at new opportunities in lower risk spaces. And as we see the economy growing, they are there to support that business as well. One point I would just like to add is, at this point of time, while we know that everybody is suffering, there are still certain sectors, and we've talked about it in the past, hospitality, travel, leisure, which are sectors that are hurting a lot more than others. And there is something that needs to be done there. On the other hand, there are sectors, government has talked of infrastructure. You have housing, you have auto, that can have a multiplier effect on building the economy. And that is where, whether it's banks, NBFCs are all ready to lend when they see growth happening over there. So I think there is still something more that needs to be done to ensure that we are protecting those that really have been hurt, in addition to smaller businesses that they already talked about. But we are also enabling those that can grow, help us grow out of the current problem.
So we've got last couple of minutes left, and then we'll not extend our appointment beyond a point with our panelists. So Mr. Kotak, the Y2K moment changed the dynamics for the Indian IT sector. The SARS crisis gave birth to the Chinese internet shopping culture. For the financial sector, how do you think the COVID crisis will change the dynamics? And if you have to, let's say, expand your current view of the financial sector to 2025, what do you think India could be staring at in terms of the financial sector because of the COVID moment?
My sense on the financial sector is it's going to be significantly more dominated by technology and digital. We're going to see a significant improvement in execution costs, operating costs, and the question, say for example, with reference to banks, is the future of branches. What's the scale of branches? What's the density you need? Can you serve customers digitally much better? Are we going to see much less use of cash, which is one of the main pain points of our economic system and the cause of a lot of friction because of the digital play? How is it going to work between the physical and the digital world? How is an average shopper going to shop? Is she going to shop from home on e-commerce, or what happens to the future of malls? Is the capacity which is there, will it get used? How will we be operating out of offices? Will the level of commercial occupation of offices change? Will we be working from anywhere in India or anywhere in the world to do our job? Why do we need to be in a specific location, not just the office? My son asks me, what stops any person from working from Iceland and being an employee in India? What stops an Indian from working from India and serving clients in the US? How does whole area of what we have envisioned as a normal, how is that changing? And I genuinely believe we are no longer moving to a new normal. We are moving to a world in finance, technology, and business to a never normal world.
Mr. Kotak, you always give us phrases that we can use in the coming days daily on ET Now. This is going to be the new one that you've given us on the never normal. But we had requested all of you to give us 1 hour. You've done that. You've done it very patiently, all of you. I'd like to thank all our panelists for joining us on this very special edition on Independence Day for the road going forward, getting growth back, India becoming Aatmanirbhar Bharat. It's been an engaging discussion with a lot of insights that have come in. So Nikunj, with that, I know we have to wrap up. A special thank you to everyone for being so candid as well.
Thank you and goodbye.
Thank you.
Thank you.